Righto, money miners. Mate, a couple of pre-quarterlies. We've got bloody Capricorn, we've got WAF, we've got a bit of bloody in the weeds about what's going on in Japan. But the big story today is what's MinRes up to in Mauritania, which is a place that looks like Mars a bit.
Well said, Matty. You nailed it.
I did not know that was a country, Matty, until a few months ago, but I did know that MMS is a company.
And what are people up to not calling MMS for a contract at the moment? Like, it's bloody absurd. I'm sure they are, but if you haven't, take action right now. Get them moving your open pit dirt ASAP. And we're talking about a couple today that could probably use some experts' advice from MMS.
Get on board.
Get on board, boys. What the hell is going on with MinRes venturing to potentially Mauritania?
Matty, this is bloody interesting. I didn't know if there was a sort of story here to sort of piece together, but we've had information sort of come at us over the past, what do you reckon, Trav, a couple months or so? We chucked in a bit in the word on the decline a few months ago now.
It was first, in the director special word on the decline a couple of months ago. So if this is the first time you're hearing about it, just give yourself an uppercut.
I like how you've started saying that.
So we're going to label this one as part one of the MinRes in Mauritania adventure, because it's not the whole story. There's going to be more to it. Frankly, you can only find out so much in a good few hours of digging, and this one's got legs to it. So to start with, none of this stuff has been publicly disclosed by MinRes. There are no mentions of Mauritania in any of MinRes' recent announcements or any that I could find back in history. So what we're going to sort of lay out is our kind of theory of MinRes wanting to get involved. We don't know the exact form that is going to take, but we've sort of had it confirmed that they are definitely interested. Maybe that takes the shape of a mining services contract, maybe some sort of ownership interest. Who really knows? It's a bit open-ended. But why don't we start with a bit of a lay of the land of where and what Mauritania is all about.
What is this country?
JD, our African expert, mate, give us bloody the Mauritania rundown.
As we learned before recording, it's not Mauritius.
Yeah, no, different. That's over in the Indian Ocean on the east. We're talking West Africa here.
Sorry, Mauritanians.
But making ourselves very, very proud here. So Mauritania is in West Africa, north of Senegal, south of Morocco, out there. It's
west of Mali.
Yeah, I guess you could.
It's like it's everywhere.
You could say that, yeah. So sparsely populated, kind of like Namibia in a sense of desert-like landscape, sparsely populated. There's only a bit under 5 million people that live in the country. GDP of US $10.5 billion, with mining contributing over 30% to that GDP.
Is it classed as the Sahara Desert, or that's west of it?
Yeah, the eastern part of the country is very much the Sahara Desert.
Okay.
Yeah, and just one look on Google Maps and you can get a feel for that.
Mm.
So
what about mining there, mate? Like, are there any operating mines?
There are a good few operations. So Kinross operate the Tassiast gold mine, 620,000 ounces per annum.
That's enormous. That is huge.
Not a small mine by any stretch of the imagination. Then you've got SNIM, who are the government miner. So as far as I could find out, 78% roughly owned by the government. And then you've got a sort of consortium of development banks and other sort of Arabic wealth groups that make up the rest of the ownership group there. So they were formed 50 plus years ago, and they're responsible for mining roughly 14 million tonnes per annum. I think that was a 2023 figure of iron ore from the sort of central north of the country. So iron ore has been mined here since the 60s. They built a long railway track that stretches over 700 kilometres, started construction in 1960, was moving dirt by 1963.
So there's a rail, there's a port, and this rail has its own kind of exotic fanfare, you told me.
It does. It's got its own like Wikipedia page and stuff. So people just jump on the dirt. They even actually hook on a tourist sort of cart at times that had a bit of a hiatus for 10 odd years. But you've also got sort of local people, merchants and stuff who they sit on top of the dirt there for
on the carriages and just
over 40 degrees during the day, freezing overnight and stuff. Just proper wild stuff. So you can see all these photos of people, sort of adventure tourists, perked on top of the iron ore in the carts in the middle of nowhere.
Iron ore Ubers.
You could call it that. So just to round out on the other operations, you've also got First Quantum there. They're producing copper, gold and magnetite from Guleb Mograine. So, and you've also got BHB offshore in to round out on the sort of natural resource exploitation.
And then
in the
from the
country.
U-Ball, mates, that's where Aura Energy's project is.
That's right. That's out
Mauritania
in
the
the
northeast.
northeast, exactly, Maddie. So the iron ore operations, this is obviously of importance because this is where MinRes are interested in the country. Like I said, started mining in the 60s. They've been mining for quite a while. Like you said, Trav, they've got a good port city out in the very sort of northwestern corner of the country there. So the infrastructure is in place, and the plans that I'll go through that were sort of throughout the 2010s, people trying to get some mines online, were very much piggybacking off the infrastructure that SNIM, the state-owned mining group, owns.
Interesting, very interesting, mate. There's a bit of a long history of a magnetite project that was once upon a time an ASX company's project that there's a long story. I have not done the work on it, but you have.
Yeah, so I got busy. This is probably what the bulk of my attention was focused on today, diving into this. So the story sort of picks up in 2010. This was a takeover that I'd never heard about. So this company, Sphere Minerals, got received a bid from Xstrata in late 2010. And here we'll chuck up a headline from the Australian Financial Review from Luke Forrestal. He's sort of known in WA mining circles.
Oh, hasn't he just gone on to bigger and better things, Lukey?
With a cracking headline, Hurdle to Xstratosphere. So what he was referring to
That's good.
was Singtang Developments, this Singaporean-based group, trying to stifle the deal of Xstrata taking out Sphere. So they chucked in a sort of circa $430 million deal. These guys bought in a sort of blocking stake. Xstrata then came and upped their bid by 20% to a total of $514 million. They were stuck at sort of 76% ownership for a little while. And then, there's a bit of a rough patch in commodities. Singtang sell down a bit of their stake, but ultimately Xstrata are stuck at about 88% ownership. Reminds me a little bit of ERA. There's more commonalities later on. But from about 2012 until they completed a compulsory acquisition, almost sort of, 2016 era is when they finished it. So from the first bid, took them 6 years to wrap up. So that did not go as smooth as I think they would have liked to have.
That last 2% took them like 4 years to etch up enough to actually get the compulsory acquisition.
So the announcements to the market become pretty sparse from 2011 kind of onward. You just get the regular kind of quarterly announcement and then the odd update on the iron ore projects that they hold.
Yeah, but of course Xstrata didn't stay Xstrata forever.
So 2013 is when the Xstrata Glencore deal wraps up, and you can sort of see from the 2011 to 2013 announcements, under Sphere it just says a subsidiary of Xstrata, and then that just says a subsidiary of Glencore for the remaining 3 years of the company's life.
Gotcha. What actual projects were in Sphere's portfolio?
So there's three kind of interest, two in particular. So obviously all iron ore projects. So the first one is Guelb El Auge. That is the biggest of the lot. That is a 50-50 JV with SNIM, the state-owned miner. So they're initially sort of talking about up to 30 million tonnes per annum. That's a sort of scoping level type numbers. Then you've got ASCAF. That became the most developed of the lot. This is a sort of magnetite quartzite operation. Started at 100% by sort of 2012. They own 90% of this project.
Is that producing, or are these all development projects?
At the time of the takeover, these are all development projects.
Yeah.
And then lastly, you've got Lebthenia. So that one actually sits in a slightly different part of the country. You can see on the map here, that one sits closer to the Kinross's gold mine as opposed to in the sort of central north next to SNIM's other operating mines.
We've heard for years that Glencore would love to have, an established kind of trading business in iron ore, one metal that trades a lot that they don't really have a big presence in. So I imagine these mines would have developing these mines would have been like a priority for them.
It sure was, mate, and they got so close. So let's start with ASCAF. Not quite as big as El Auge, like I said, but it was ahead of that mine in its development. So by April 2014, it had received final investment decision. Iron ore sitting over US $110 a tonne. They are planning to build an operation that will produce 7 million tonnes per annum, US $900 million construction cost. Production to start at the beginning of 2017. Glencore, within a month or so, agrees with SR, that's a UAE-based contractor, a deal to construct the mine. That contract was for sort of circa US $600 million. Then in May, this is very important, in May of 2014, they agree an 18-year deal with the state miner for the right to use the rail and port.
18 years starting 2014.
Yeah.
Which, would get them out to 2032.
From first ore, so that would have started 2017.
Gotcha.
Yeah, and that's sort of got a take or pay component as a part of that deal. Now, at the same time, you've got the bigger operation progressing through 2012, 13. They're working on the PFS. June 2014, that comes out. They're talking about these modules, which is sort of trains or stages, if you like, each being 9.5 million tonnes per annum. So on a single module, 9.5 million tonnes per annum, that'd be an over 200-year mine life. Or at 45 million tonnes per annum, a very big mine, that'd be over a 40-year mine life. That's so crazy. The initial phase was for 2 of these modules, and they'd be producing a sinter feed product from the magnetite ore that they're mining there, beneficiating that to produce 66% iron concentrate using a sort of dry magnetic separation.
This is the Al Aouj project.
That's right. That's right.
That's an enormously long mine life. It's giant resource. Wow.
Huge. So the next step for that one.
Years. Hang on. Did you say using dry magnetic separation? So it's an entirely dry process for magnetite.
That is right. So this came out 10 years ago, and that's a bit of a unique proposition. And then there was further work, which I'll touch on, by Ausenco, the engineering firm, they sort of optimized and refined that, and the ultimate numbers that they came out the year later in the feasibility study were a bit tweaked, which I'll touch on. But you're right, it's a bit of a different style operation or processing technique. And you can see in the photos here, it's right around this sort of hill or kind of peak situated. It's pretty sort of rugged and wild landscape where they were sort of proposing to build this operation.
Is that hill the ore?
Yeah.
Yeah, so it's just a big bloody, rip the guts out of a good strip brush, yeah.
It's amazing how you kind of don't need to be a genius to discover these things. Hey, it's like it's there.
Yeah. Complete logistical operations, and if you've got the train line and all that and the port built, then you're kind of halfway there. But
I want to see someone blow that whole thing up at once, because it could be done. It's got a free face. Just send it everywhere and just dig the bastard up for 200 years. Could be done. You
have to look at on Google Maps what the other operations look like from above. They just look completely wild. They're just a much darker sort of composition, and then if you zoom in enough, you can see these big pits that have been dug in. It's completely wild. And like the story of the discovery of these was, it had a bit of Lang Hancock to it, people flying over and seeing all the measurements and stuff being tweaked by the magnetic sort of pull from the ore, kind of similar to Lang flying over and seeing the glistening of the magnetite sort of ore in the Hamersley Range and stuff.
I wouldn't have predicted that the cross-section would look like that. But admittedly, I haven't looked at many cross-sections of iron ore projects. But that's interesting how the ore literally looks like a V shape.
Yeah, and imagine you have sort of cover sort of blowing over and stuff. Yeah. But super interesting. But this is not a good time to be in the iron ore market. Everything comes to a screeching halt. And like if you guys just think about what's happened in lithium in the past year, like it's not quite of the same scale, but it's just as dramatic in terms of the impact that it has had on the operations, people trying to come into production. So at the beginning of 2014, you're looking at a US $130 price for 62% iron ore. Finishes the year around US $70. That is just disastrous for a project like this that they've just pressed go on and starting to build the thing. By the end of the next year, 2015, it's closer to US $40 a ton.
That's right. It probably is in a way as dramatic as lithium in terms of the margin. In terms of the operating costs, it effectively goes back to
100%
break even.
Yeah, so it's not a 90% drop off in price, but it's just as disastrous for the operations going around. And in October 2014, this is only a handful of months later, Sphere, i.e. Glencore, come out with an update and say, in light of prevailing market conditions, ASCAF will slow down. So they've completely pulled the pin. Less than a month later, they're demobilising the contractor. early 2015, there's a big impairment on the assets, and it's all kind of done and dusted after the big build up to actually mining the thing. The media had reported that Glencore had paid US $1 billion to the state-owned miner for the right to use the port and rail facilities. And they sort of said at the time this is a bit opaque, but they could still be on the hook given a sort of take or pay
So the take or pay, so they'd have to, if they didn't utilize the capacity, they've got to pay for it still.
Yeah. So not much more you could find out. But on the other operation, the bigger one again, like I said, Ausenco shared a couple of different numbers. They spoke about, after a bit of optimization, 11.5 million tonnes per annum phase one, with the potential to double that to about 22 million tonnes per annum using both stages. And if for whatever reason you want to look back into it, you can see it at this point in time, Glencore start referring to EMC. EMC is just the joint venture, the 50-50 deal between Glencore and the state-owned miner. So that's
over the Al Ayouj project.
That's right. Not over ASCAF, just over the bigger project.
Yeah.
So that's what you start hearing quoted more and more.
And 11.5 million tonne per annum phase one.
Yeah.
Gotcha.
Still long mine life as well. And then late 2015, Glencore get a bit tired of Sphere being a public company. There's just three major shareholders, Glencore about 88%, Qatar Steel and Singtang, who's still just hanging in there. But Sphere, aka again, Glencore, launch a rights issue. And the other two, this is the very bottom of the commodity market. Those guys have got no interest in participating. So Glencore lift their interest to 97.5% and do a compulsory takeover and take it out.
The ERA analogy.
Exactly. Very much so. So Sphere then released the feasibility study, sort of confirming a bit over 11 million tonne per annum capacity. But they sort of put in the line, which you don't see all that often, the economics show no viable investment case based on existing CapEx and OpEx, hence the ore reserves have been reduced to zero in light of the very, very, very low iron ore price we were seeing of about $40 a tonne at that point in time.
Bloody hell.
And it gets even more wild. Glencore give this group, Alrada Resources, the right to buy the ASCAF operation, which 1 year before they were going to build for $1 billion. They give them the right to buy 80% of it for 10 million plus a royalty.
No.
Really?
Yeah. And then Alrada don't even take them up on it. They drag their feet, paying them $100,000 roughly a month to continue extending the exclusivity that they have, but they never follow through with it. And it sort of falls at that point in time by 2016 where the company's scooped up and there's no more public announcements. But you can see, I just found a sort of 2020 reserve and resource statement from Glencore and they still own it. So Alrada never followed through, but that could have been a great deal.
So that was US $10 million plus a 2.5% royalty.
Yeah.
That royalty would have been worth a hell of a lot of money, but
that royalty would have been worth heaps.
Yeah. That's the sort of royalty that makes billionaires in no time. But who is Alrada? Like, what is Alrada?
They're an Arabic mining group.
Right.
This was about 5 minutes before we started recording, so it's fine. Too much info.
And about 10 minutes before we started recording, I hear you ask yourself, JD, and we mentioned it at the start, how the hell does this all relate to MinRes?
That is the question I was trying to answer, Maddie, before I got massively sidetracked into the history here. But the word is that we've heard MinRes have been interested in these assets, specifically the big one in Mauritania, but all three of the assets that Sphere owned that Glencore sort of holds the interests in for years. You know, we'd heard people say as far back as 2015, these guys had sort of interest. And, you know, you remember 2015 was a disastrous time for all commodity producers. Mining services companies were no different. Like, just look at the share prices of NRW and these sorts of guys. They just totally bombed out 2015, 2016. It's been a long road to recovery.
This is all allegedly, by the way. Sources have told us.
That's right. Sources have told us that MinRes have been interested for a long, long time. And, you know, I'm sure that you could say that for heaps of assets out there. Who wouldn't be interested in some of these things if you can pick them up cheap? Not that they had eventuated and they picked them up cheap or anything. So we don't know if the angle is that they would want to pick up the mining services contracts here. I'm sure they would be interested in that type of arrangement, but we'd heard that there's a UAE-based subsidiary that had done a lot of work on these assets here. Again, I'm not expecting anything for quite a while, given the stretched balance sheet that MinRes currently has. I think we can sort of safely say nothing is going to happen for quite a while. But
Well, that was the initial intel we had, was that they actually wanted to own an interest in this. This was a couple of months ago, but they had they were hyper conscious that the market is worried about their balance sheet, and they wouldn't want to add to any perceptions that they'd have more kind of capex or outflow kind of stress. But there's another angle as well, and that's one where it's you don't have to, if it's a crushing contract or a whole of operations kind of contract, then it's not real balance sheet stress. That's like, that's
definitely
EBITDA growth, which the market would get excited about, as opposed to the
especially
other
for
way
a freaking 30 million ton operation or something like that. That's huge.
Yeah, I just don't know how near or real or close it all is, because it's all kind of, it's like, you've had to source a bunch of information from back when Sphere was publicly listed, and it's been a long time since then.
Hot Copper is a surprisingly good source. Had all the announcements.
Oh, there you
Just
go.
find them like that. But yeah, given the current focus on lithium energy and of course Onslow, not to mention the mining services contracts they've got right now, I'd imagine this is very much on the back burner. Even if it's just from sort of signalling, like you say there, Trav, the market wouldn't sort of stomach it too well. But everything's sort of got a price, and if you'd snap that thing up in 2016.
Yeah, not everything we put in the director special kind of has a fair few people kind of bite at it, but this is one of those ones where we put it in there, and I had like 5 or 6 different encounters with people, but various forms, who are saying, keep digging. There's something to this story. Keep digging.
I think we'll wrap up by saying there'll be a part 2 to this story. This is the background information, and I'm keen to dig in the weeds on part 2 and see how MinRes's interests go a bit deeper in the work they've kind of done in that 2016 period onward in these assets in Mauritania.
Yeah, good digging, boys. Good digging. I think since it looks like Mars, I'd say Greenland's equipment needs to get over there and start digging for water.
Oh.
Turn that dry magnetic separation facility into a wet one. Greenlands are the bloody mob that could set you up the Rolls Royce of water facilities to just wet the shit out of that joint. I think this would be a challenge. Like, holy snap and duck shit. Talk about arid.
Yep.
But I assume with a 600,000 ounce bloody gold producer, there must be some water there somewhere. Has to be.
Yeah.
Has to be.
They probably got Greenlands in back in the day when they cranked it up.
I think,
Kinross.
quite possibly. So, mate, they'll fill you to the friggin' gills with H2O, those guys.
Yeah.
Mate, is there anything on this capability statement here that you see water related that they don't do? Oh, it's pretty much dewatering. I don't think there'll be any dewatering requirements over there.
Yeah.
Dust suppression systems.
There'd be a whole lot of dust
There's
there,
a
Matty.
shitload they're going to put in over there.
You can see some dust.
At
yeah.
Mars 2.0, all
Yeah.
the piping, all the ponds, bloody everything H2O, and you can guarantee it will be
high quality H2O.
Thank you, Bobby. Thank you, Bobby Boucher. It will be high quality H2O delivered to you by Greenland's equipment.
Get on your Greenlands.
Yeah, I
They
love it.
find water in
Oh,
Mars.
and ding, ding, ding.
Have a guess who's a shareholder of Mins.
The AGC fund
LGC.
is long Mins. Trav, I'm keen to hear what you have found out digging into the trend of Japanese conglomerates coming to Australia, going all over the world, doing minerals deals. This is something that's
bit of
a
growth.
head full of steam, I reckon.
I'd like a bit of credit for me prompting you to this for the last year about the
Been
rise
early.
of Japan.
You've been early. Yeah.
And
Japan
South
did have a
Korea.
bit of a rise, back in the 70s. But
I've been talking about it for, ever since the podcast started.
It's we've been noticing this trend a lot, I think, and what I've uncovered, JD, is nowhere near as interesting as the beautiful narrative you just told on Mauritania. I think I want to do a site visit there. To be entirely honest, but
Your story could be way more sort of tangible and real than what I just rambled about, though.
But yeah, we've been reading announcements every day. We put announcements in the director special, and one trend that we've certainly kind of been clued onto is just like how frequently these kind of Japanese conglomerates or trading houses come up as partnering, even in the early stage stuff in these like copper or critical minerals projects. Like the one that I noticed today was it was Camino Minerals they're backdooring basically a development ready Chilean copper project called Puquios, but they're acquiring their interest in a 50-50 JV with Nitetsu. Nitetsu is a Japanese miner. The parties are stumping up $20 million up front, up to $25 million more in contingent, plus there's a 1.25% net smelter royalty. And the vendors, private equity group Denham Capital, who we've seen pop up plenty of times. This transaction in and of itself is a pretty interesting one, but what I really want to focus on is just that whole litany of announcements, just showing how aggressive that Japanese sort of money is flowing into even early stage sort of mining companies out there. So I'll rattle them up, but please break me up, gents, because this will be a hard one.
Let's go, mate.
I'll start with Idemitsu. Remember their investment into Delta Lithium last year? It was $46 million for 15% of the company at a premium. Well, they've also invested in Critical Minerals Group, another ASX company who are focused on the Linfield Vanadium project, where they stuffed up money for a 34% interest in the IPO 2 years ago and have maintained that since. Plus another vanadium play called Veco Group, which Idemitsu, Sumitomo Electric and Veco, they've all kind of signed this collaboration agreement to build and sell vanadium flow batteries to Australian customers using Sumitomo's hardware and Veco's electrolyte. Now to Itochu, this is a bit more left field, but they provide an offtake to BCI's Mighty Salt project. They said they'd exit thermal coal in Australia by now, but they haven't. Sumitomo, in September last year, Sumitomo said they'd start this joint study with Liontown for downstream hydroxide production in Japan. And then in June this year, it was Sumitomo who said they'd spend $4.5 million to earn a 51% stake in Hammer Metals Bullrush Copper Project in Queensland. So, farm-in stuff, early stage. Jogmec, you seen those guys before?
Jogmec. Where's that? That rings a bell.
Just last week they popped up, didn't they?
That's it.
Yeah.
Okay.
It was 30th of September. So, last week, the $6 million lithium farm-in with Alchemy on Roe Hills, which is near Manor there in WA. But earlier in the year too, they did this $5 million farm-in with Adventus on the Tres Picachos project in Ecuador as well. Marubeni, this is...
I've never heard of that.
They've
got a long history with coal mines in Australia.
Yeah, They actually own 15% of Roy Hill. Gina's Roy Hill iron ore mine.
Of the mine.
Yeah,
wow.
Yeah. They also own 30% of Centinela copper mine with Antofagasta in Chile, among other things. In December last year, Centinela got approved for a massive $4.4 billion expansion. Late last year, Marubeni also, they agreed to acquire an extra stake in Minera Los Pelambres copper mine in Chile, and also a 20% stake in Pan Pacific Copper Co. from JX Metals. In recent history, they said they'd spend 12 million Canadian dollars to earn a 20% interest in some of Hudbay's copper exploration properties in Manitoba and Canada too.
What about good old Mitsubishi, mate?
The old school.
If you go back a year ago, Mitsubishi Material, they acquired 5% interest in Western Copper and Gold Corporation for 21 million Canadian dollars. They'll focus on the Casino Copper project in Canada. They also put 20 million Canadian dollars. They placed at a premium to buy 5% of Marimarca. This is a project in Chile. Earlier this year, Sumitomo and Mitsubishi together, they basically agreed to spend nearly $100 million on a DFS for Ardea's Kalgoorlie nickel project, which is big nickel laterite project, doing a bunch of work on a DFS for them. Mitsubishi, they also signed an MOU with Chalice, if you remember, to work on the PFS together for Gunnerville.
Jeez.
Sojitz, you heard of them?
No.
Have you ever come across JARE, JAR, when you're reading Linus's announcements? That stands for Japan Australia Rare Earths, which is co-owned by Sojitz and Jogmec. They have a long history with kind of accommodative funding for Linus, but as recently as March 2023, they tipped in $200 million into a kind of friendly loan facility and waived the prior interest payment at the same time. In Australia, Sojitz, they also have an interest in Worsley Alumina. They've got a bunch of coal mines, interest in a bunch of coal mines in Queensland too.
God, this is like a beautiful mind. Bloody extravaganza here, Trav. Bloody keep it rolling for me, baby.
The mind map would look pretty cool, but this is a podcast, unfortunately. So
you make your own, everyone. Yeah.
Last one is MAC. So not your typical like trading house like the others. They're actually not even a Japanese miner, but they are a miner. But there's a Japanese trading house, Link. They have this 95% interest in the Mount Pleasant thermal coal mine in the Hunter Valley. A few months ago, it emerged that they were paying up for South Australian copper hopeful Rex Minerals with their Hillside project. They're acquiring the company for close to $400 million cash, and they're planning to spend even more developing the big project. Like it's probably going to be $1 billion capex there. I don't know if they'll do it alone or not. But you've got, I've read the scheme booklet, and looks like they've got this acquisition facility in place where Sumitomo is on that debt syndicate as well. So there's involvement of a trading house. But it's this sentence in the scheme booklet which is interesting too. I'll read it out. The proposed acquisition of 100% of Rex is consistent with the MAC Group's objective of investing in the copper sector and diversifying from its current significant investment in the Australian coal mining sector. The MAC Group is well placed to fund the required investment for the intended development of Hillside. And before MAC actually acquired Rex, they actually signed an MOU with Netetsu. Rex and Netetsu did, who we mentioned at the very top as being the instigator of the story as well. And I'm sure that this list is not exhaustive. I reckon I've missed plenty here, but you kind of get the picture, right? There's a bunch of themes that pop up just in all of those kind of recent, deals or investments that I've rattled off. What did you notice?
Japan, these trading houses, they've got a lot of money at the moment, and they are keen to secure the minerals. They've also got a lot of downstream capacity in country and around the world, right? So they want to source. That's why they did a lot of the deals throughout the Andes and in South America to like guys like Sumitomo to source the raw materials, right?
Yeah, it's like a lot of those ones were early stage stuff. They're doing like farm-ins.
Yeah.
Like you got to have a really long-term outlook to get any reward in terms of securing metal supply.
Yeah.
So they're thinking on an ultra long outlook. I think 20 plus years to get raw material reward from that. There's another theme I noticed, which is like there's a lot of copper. A lot of that stuff was oriented towards copper. These trading houses, it appears they have an explicit strategy to get longer on like copper exposure. But I wonder if kind of underpinning a lot of it too is just like, why are they like where's the money all coming from? I don't know if it's a symptom of cheap money or cheap capital in Japan where you've still got like 0.25% interest rates and that kind of finds its way abroad. I don't know. But yeah, I find it interesting.
And it's just because it's allowed here. Like they're just like bring on Japan because it's ex-China.
Yeah, very much so. The track record for looking long-term is a fascinating one and a real attribute of Japanese businesses. A lot of these companies have been around for a long, long time. They get passed down generation to generation. And they've got a good habit for looking a long way into the future. And in our neck of the woods, you do that by going with the juniors. So that's a great point.
One you did miss there that'll be bloody huge that have been huge in Australia and will continue to invest and probably should invest in us is Komatsu, biggest supplier of yellow gear. And because if you come on board Komatsu, we could probably get MMS to buy some gear off you. Just saying. Give us a buzz.
Komatsu, mate.
Komatsu, huge.
Yeah, they are.
Biggest supplier of yellow gear. So if you're a yellow gear snob, just give me a ring, Komatsu. Just let me know. So,
Toyota too, we'll have.
Toyota. Oh, bloody sensational digging, Ricardinho. Look forward to a South Korea one following as well. Like to fulfill my rise of Japan and South Korea. But sensational work, boys.
That'll come in part 2 with JD's part 2.
Oh, mate, lucky we've got future episodes forever.
Let's make it happen.
Well, and as I said, I'm stick to my lane and competency level. I'll just review the quarterly updates with a bit of metallurgy and stuff, boys. So not at the level of you two geniuses, but why don't we start with Capricorn?
Don't talk yourself down, mate. I think there's a bit of a story here as well, so keen to
there's
hear.
a bit going on. Nothing we don't know, but it's Capricorn are they definitely don't get the attention for any delays or getting on time because everyone's like, Clarkie will just sort it out. It's all good.
It helps when you don't do a quarterly call for that one announcement per
and
quarter.
You just make cash every quarter and everyone just leaves you alone. So mining companies, if you want to get left alone, just make heaps of cash each quarter on quarter and you'll be fine. So you'd say it's stock standard performance for Capricorn, but it looks like they've moved. Looks like they're in setup mode a bit. Like they moved a shitload of waste to set up this Bibra open pit for the coming quarters, like an extra 500,000 BCM move compared to the prior quarter. So a shitload of work done there. They also commissioned the liquid oxygen and lead nitrate facilities, which you actually see their recovery is lifted by 2.8%. So my understanding is like this liquid oxygen, you add that in like the pre-leach, aids in the oxidation of any sulfides in and around encapsulating the gold if there is some. The lead nitrate also enhances the oxidation of like the soluble sulfides during pre-leach. And so both of them together sort of increase the gold available for dissolution into the cyanide, and also I think the lead nitrate also reduces the interactions of pyrites with the cyanide and lowers your cyanide consumption. So
You are a metallurgist, I think we can now officially call you, Matthew.
yeah, mate, it just flows off the tongue, off the tongue. But yeah, so obviously a couple of processing improvements they put in place, which nearly 2.8% lift in recovery, which is good, and good considering the grade was lower, because it's usually.
What happened to the grade?
Well, don't know.
They said it was part of the mine plan, but that 0.8 grams per tonne jumps out at you, doesn't it?
Yeah. So it's obviously down from 1 gram a tonne a year ago. It's obviously the phase they're going through. As I said, cash build of 24 mil. And that's before they then spent 4.5 on Mt Gibson, so about 20 mil cash build. But yeah, obviously that grade did hurt them a bit. So like, for instance, if they put the same milled throughput at 0.9 instead of 0.8, they would have done 31,000 ounces. So, but yeah, it's probably, considering they closed out the hedge book and everything, so they had full exposure to the gold price, they probably, the grade would have been helpful. But hopefully, by the look of the comments regarding the waste movement and increase in available work areas, you could probably expect a pretty decent bounce back in Q2. I would imagine from the commentary,
right?
Without seeing it. So the big future kicker for Capricorn is the Mt Gibson growth story. It's that's gonna add they're guiding 110, 120 for this year, but then Mt Gibson's going to add another 155,000 ounces to the production profile when that comes online. So look, 10-year mine life at this stage. I think it's 152 for 7 years. 5 million tonne mill, pre-production capex 260, which have started deploying a little bit for the camp and everything. So potential for future underground there, which is not really included in the PFS to my knowledge. But I think everyone would be asking like, well, what's the hold up of Mt Gibson? How's it all progressing?
Totally.
So look, and I think it's all been sort of disclosed and everything, the permitting process they're going through, because they submitted the permitting referral Q2 FY24, so like about December last year. That's for the WA permit, the state one.
Yeah.
So, and then they're scheduled to submit the public environment report, the PER they refer it to as, in December this year. So that's the federal permitting, and they're going to sort of run in parallel together. So that, and then once that federal PER is submitted, that goes for public consultation and final assessment. So they're obviously at the mercy of our great government, who loves really pushing this shit through as quick as possible.
Yeah.
Because there was, I think they were hoping to get, because I think for the PER, they were hoping to get their response in May initially, but I think then they got it in June. So because they had to get that response to get the guidelines of what to put in the PER for them to submit. So I think you see T-Max Canaccord model that they've pushed back first gold from Mt Gibson by a quarter. So
that now sits in FY27.
Yeah, so it was going to be March quarter FY26, been pushed back on the model to June quarter FY26 for just pending possible permitting delays.
It's like it's come up a few times in conversations, just like how the mid tiers are facing pretty crazy kind of permitting timelines in a way that they never used to have to, and in some instances even require like lobbying to move things along. And I wonder if Mt Gibson kind of fits in that category,
because I think they've been at this for about 2.5 years, like the permitting approval, like the prep and everything, like huge process. Like it's been going on for a long time, because everything else seems to be ready to go in a sense, like all the tendering's out for the mill, the open pit, power and all that. But it's if they look, they're the best in the game at executing. No word about it. Like if they can come FY27, even if they're taken into account there, it might be if there is a little bit of a permitting delay, but as long as construction and everything's on time, the model's saying that they're going to be producing like 345 mil of free cash flow in FY27 at 264,000 ounces, and they'd be debt free by then. They got it modelled at pulling out about 50 mil of debt, paying it off because you got the Carla Winder operating cash flow. So if that all comes to fruition, like come FY27, they'll be printing some good chunk of coin there. So that's what sort of Capricorn's heading to. You won't be. It doesn't look like you'd expect much free cash flow for FY25 and 26 because it's all going to be going into Mt Gibson and debt repayment. So sort of really building up to that point.
Yeah,
right?
It'll be. I remember if you went back only a year ago, maybe 18 months ago, every broker report you'd read about Capricorn had kind of Carla Winder producing at an all-in sustaining cost of $1,200 an ounce ad infinitum. They just ran that through the model to the end. But you can already see 18 months later, like the costs are up to, where is it? It's like
14-ish,
1,400 per ounce. But it gets more and more costly as they get, more and more through the ore body. Just they have to do more and more stripping and and kind of towards the top, you had a bit of a juicy section there as well. But I think the cost per ounce will go up over time as opposed to what the brokers kind of were running previously too.
Yeah, but it's just one of them ones until they don't produce free cash. It's one of them companies the
market will give the benefit of the doubt. Yeah.
They seem to make it work. Like because if they know that waste stripping's increasing, like it's like they know the formula to just make it work and keep that consistent operating cash flow at Carla Winder. So yeah, you just can't discount the management execution there. So.
Absolutely.
So, but I'll see for that PFS. I bloody hope CrossBoundary Energy's on the tender for their hybrid power station for Mt Gibson. It's friggin' written out in the PFS clear as day, requiring an independent power producer under a power purchase agreement.
It couldn't be more explicit, mate.
The only thing missing in brackets is Tim Taylor, and CrossBoundary Energy. Mate, this is their bread and butter. Mate, Timmy Taylor, he's been there and done it. Build, own, operate power stations for mine sites in Australia. Mate, multiple times. Multiple.
This is what he came from Africa to do.
Yes, Tim Taylor come from Africa to do this.
In Australia.
He did it in Mauritania first.
That's it, yeah.
He has built global power. Mate, trusted source of reliable hybrid power solutions for Australia.
That'll help the permitting. Hybrid. Give yourself a free bonus and call Tim Taylor. Capricorn and everyone else. This has bloody got his name all over it. Bloody you beauty. Cheers, CrossBoundary.
Go CBE.
So yeah, exciting times. WAF. So we talked about them yesterday. They've put the pre-quarterly out and an update on the mining permits.
It looks to be all right.
I think you were bang on what you said yesterday, JD. This could, you didn't say it was. You could say is this another buy the dip moment, and they've rallied about 10% back today. So
yeah, I mean the comforting thing I think for the market was the announcement today saying they'd sort of had contact with government officials who had then informed them that the president's sort of comments were with respect to the companies that were not abiding by the laws in Burkina Faso. That doesn't include the people who are abiding, like WAF. So yeah, I think
it's pretty unbelievable all that reaction off a radio conversation.
Well, it is the president of the country. So
yeah, I know, but it's like, it's very, you could say loosely interpreted, but it's like just this is what they have to deal with, and it's not the first and won't be the last.
No, it won't be. They also chucked up a September quarter update. Not too much detail here, but 48,000 ounces were produced for the quarter. They sold slightly more than that, and they're selling it, US 2,500, as they like to tell people. They're unhedged, so taking advantage of that and making pretty decent cash flow while they keep working on Kiaka. So that's 155,000 ounces for the year. They should pretty comfortably get to their guidance number, which is 200,000 plus or minus 10,000 ounces. Interestingly, they pulled out 29,000 ounces this quarter from N1 South. So that comes out at 7.2 grams per ton. So Not bad at all from the underground there.
Oh, very good. Oh, yeah, the AliGC ETF, still a holder.
Ding, ding, ding. And I think that is us for today.
Ah, very
Gentlemen.
good, boys. Sensational effort by you two on the digging.
All round. Couple
Sensational
other
effort by Tim Taylor
Oh,
and Greenlands, mate.
just Tim Taylor in Greenlands.
Yeah.
That's a hell of a team.
CrossBoundary Energy, but Tim Taylor.
I think you could.
And Greenlands.
Caleb.
Go to Mauritania, Caleb. You'll love it there. And thanks to our bloody great friends at Mineral Mining Services. Kamatsu, give me a ring. I'll help you out. Who else we got, boys? Sandvik Ground Support.
Sandvik, our good friends at Grounded as well. We've also got the good people at CRE Insurance, K-Drill, MMTS, Australian Earthworks and Haulage. And while you're at it, use a spark chart.
Do that. Hooteroo, money miners.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.